Mark, Rahel just brought up so many different points here. Brexit, we have all things going on with mergers and acquisitions, cross-border. There are many cross-currents in the market right now, yet the Euro Stock 600 hit a record high. The S&P 500 hit a record high. Is this just a situation where nothing can take down the markets?
Well, I think a lot of the worry from those factors never materialized. You see that the Brexit, the pro-Brexit party passed and won the election, and the London market responded favorably. And if anything, the weaker pound is going to continue to boost that economy. So a lot of the worries there proved to be for naught, at least until now. And back home, the trade news turned out to be a double winner with USMCA and at least the verbal agreement for a phase one. So a lot of times what happens is the worries in the market don't materialize. And meanwhile, the U.S. economy and the underlying economic strength continues to be strong. And that is the real story. And that's what won out. The strong U.S. economy, the strong U.S. consumer, and looking into 2020, upward earnings and GDP perhaps on the rise as well.
All right, but stocks do not go up in a straight line. And it's not to say that 2019 has been a straight line, but after a really rough and tumble 2018 fourth quarter, you can maybe see why markets would want to kind of recover the way that they did given the economic data. But we are now reaching levels where valuations are a concern, are they not?
Absolutely, absolutely the case. And we've talked about that on this program. I think valuations matter. I think Wall Street is not a one-way street, and investors and enthusiasms are a little getting ahead of themselves. Forward valuations near that point, over 18, where typically the next few years of investing aren't as ripe as what's just occurred. So I think investors need to stay invested in stocks. The story, the underlying economics are just too strong, but I think they need to be selective. I think the entry points can matter here. I think looking to buy in on some pullbacks could make better sense. But yes, I think investors need to temper their enthusiasm at these lofty levels.
All right, so you said selective. What are you selecting right now, and what are you staying away from?
Well, I think what we want to look at is what hasn't run up and where some valuation might be working to our favor. I think if you look in the small cap space, especially in small cap value, you'll see market multiples actually below or below historical averages. And I think you could see some opportunity in the small cap space. Banks dominate small cap value, and they've pulled back because of this flat yield curve and intense pressure on margins, which is really deposit pressure at this point from internet banks, from being overbanked. And I think you can see an M&A rally in banks that could drive that sector. You saw it in the larger cap sector with SunTrust and BB&T merging. I think you could see it more in the mid cap space as well. There's going to be a fierce competition for deposits, and really the best way for banks to deal with that is by improving technology, gaining scale, and joining forces to reboost their margins, which have come under heavy pressure in this flat yield environment.